How can you move forward with investing during a downturn?
Are you a working professional but struggling to balance the workload of your career, family, obligations, and preparing for your financial future? If so, this podcast is for you. You've spent years learning your craft, and now it's time to focus on your financial future. This podcast will teach you what you need to retire wealthy and happy. Let's dive in.
Welcome to the Retire Wealthy and Happy podcast. Today we have the totally amazing Corey Dutton of Private Money, Utah. She's a private money lender located out of Orem, Utah. Good morning, Corey. How are you doing today?
Doing great. Thanks for having me, guys.
Hey, and good morning. It's really fun to have you. You and I have known each other for a long, long time, and it's really fun to have, when we get people on that we know quite a bit about, we can tell stories that you probably don't want the rest of the world to know about. How's that?
We got a lot of inside dirt, but we're going to leave it out for this podcast today. Corey, why don't you tell us a little bit about yourself?
Okay. I've lived in Utah for 17 years. I'm originally from Austin, Texas. I got into hard money lending. I used to work for a hedge fund before the last financial crisis, and one of the asset classes that they invested in was real estate. And a sub-asset class of that is trust deed investing, which is private money lending. Most people don't know that that's the formal name for it. And they taught me everything I know. They lost everything. They were doing 100% financing loans leading up to the last financial crisis. And so kind of learned what to do, what not to do from those guys. So it was a great blessing. And then after the financial crisis started, I started the company, Private Money Utah, in 2008. And here I am.
You know, what a lot of people, I think, don't realize about private lending, you loan some of your own money, but a lot of what you loan is other people. Isn't that right?
That's right. The majority of my money that I loan out comes from retirement accounts, 401ks, IRAs. A lot of people want to use these tax-deferred investment vehicles, such as, the retirement accounts, to build their wealth. And they do it through trust deed investing or private money lending.
As the economy changes a little bit, I'm curious, how have people been less willing to loan their retirement money and hard money type assets, or have you found that that's still quite liquid for you?
It is very liquid. A lot of people have pulled their money out of other assets that they're invested in, particularly the stock market and the bond market, and they want to look for alternative investments. So yes, now is a good time. There is an interesting phenomenon, though. When the stock market took a nosedive in February of last year, a lot of people decided to go and become private money lenders overnight. So what has that done? It's increased the amount of private money in the market, which has then pushed the interest rates down, right? But at the same time, all of my investors and other private money lenders tend to perceive that this is sort of a higher risk environment right now. So they want higher rates of return to compensate for that risk. So you've got all this money that's come into the market to push rates down because supply and demand, right? And at the same time, my lenders want a higher yield because they perceive that the market is a little riskier right now. So it's an interesting time for sure.
Yeah, Roger and I both have done. You've done hard money loans for both of us at various times, and I can say for myself, I love working for you. I know Roger enjoys it because I had a couple of projects a year or so ago, and I said, Roger, who are you using now? He says, oh, you got to go with Corey. She's the best. So, how's the is hard money being affected by? We look at the statistics, and even I've been a realtor for years, and I'm not quite sure what's happening with the supply of houses out there right now. We keep thinking that interest rates are coming up and we're going to get more houses needed to be sold, but the inventory is staying pretty low for houses down there. And I know the guys that are continuing to do hard money or not, they're using hard money that are continuing to flip houses and things like that. Most of them, when I talk to them, and I'm surprised that there's not more of a downturn, but it really seems like there's still quite a bit of demand for people flipping houses. Is that what you've seen also?
Definitely, especially in the, affordable home price range, where in Utah, that is anything under, 450, maybe as high as 500. I'm seeing a lot of activity and a lot of action under 450. And that's kind of where I'm trying to target right now personally, because that's where I'm seeing houses still going under contract in a couple of days.
That is comical to me, and we all live here in Utah. But when you talk about a $500,000 house as an affordable house, I'm like, holy smokes, what has the world come to? But
Right.
That's where we're at.
Right. I think now the national affordable home is, I think it's, what is it, 385 or something. I mean, if I would have bought my first home and paid 385, I mean, I couldn't have bought my first home. I mean, I wasn't in that part of my life yet. So yeah, it's hard to believe, isn't it? I think a lot of that has to do with the large number of institutional investors, corporate real estate investors that have entered the space since 2012-ish, when Invitation Homes, Blackstone, as we all know, entered into the single family home market and started buying single family homes to rent, shortly followed by Pretium Partners, which has purchased $23 billion in single family homes since 2016. I think that's when they got into the market. So I think that what that's doing is that has pushed the supply down and then, pushed up prices, obviously, because of that demand. So definitely.
And we, I'm a big advocate of the 1% rule, right? We use it for multifamily. We use it for single family housing. And we are, as far as single family housing, we are so far away from the 1% rule here in this market. It's like nothing makes sense to buy and hold in single family housing. I have no idea how these guys are going to pay a return back to their shareholders when their rents won't even pay the mortgage, let alone, any return on the equity. But the world is still going crazy. I mean, we saw this at COVID, and it still seems like it's upside down a little bit. So I don't know. I mean, I wish I had I've got a coin. One of my economics professors says you can be right 50% of the time if you just flip a coin to make decisions. But beyond that, even if you think you have some insight into it, more than 50% of the time, I think I'm wrong. So, Roger?
Yeah. Corey, what have you seen as far as like flippers? Like in the last few months, 12 months now, we've seen interest rates go up. Have you seen a lot of the house flippers drop out of the market? Are they, still there? Is it a percentage? Like 30% fell out? What have you seen?
I don't know if it's a percentage. What I am seeing is I'm seeing a lot of the, masters of the universes, these big home flippers that are doing, multiple projects at a time. I've seen them pull way back. I'm not getting any requests from them. Many of those guys were holding properties, have been holding properties. Some of them still are. My own borrowers, real estate investors that did flips last year and the year before have struggled. So they're not looking for new projects. What I am seeing is I'm seeing a lot of newbies that are coming into the market right now and wanting to get into house flipping. And it's a precarious time. So that's what I'm seeing is the experts sort of pulling back and looking for other investment opportunities in different property types. And I'm seeing just this huge, massive influx of, beginners. And, maybe that's because all these guys that are experts have now decided to sell seminars. I don't know.
It's interesting. It reminds me of I think it was Warren Buffett, at least it was attributed to him. Somebody asked him if it was a good time to get into the stock market right now. And he says, I can't tell you when it's a good time to get in or get out. He says, what I know for sure is that when your hairdresser and your taxi cab driver know more about the stock market than the professionals out there, it might be a really scary time to get in. And it seems if you've got a bunch of newbies that are getting into the investing, and you know, God bless them for wanting to get in and try and taking a stab and doing something, but sometimes the world can be a little more complicated than just going to a RIA club meeting and going and putting a project under contract. So.
Yeah, the newest episode of Tariq Al Musa, Flipping Houses, you know, it changed from flip or flop to the Flipping Al Musas. The whole new season, first 5 episodes is out, and it's going to bring a lot of people in thinking, oh, they can make like $150,000 in half an hour. I'm going to give it a shot. Just not the case at all. Like, not at all.
Definitely. And then we're seeing, you know, the iBuyers, which are the, you know, home flippers, sort of biting the dust. A lot of people came into the market, you know, as we know, Zillow, Open Door. I'm sure you guys can think of a few others. There's half a dozen of them, and they're sucking water right now. They're drowning. So yeah, I don't feel sorry for them, actually.
We've actually got a project that's in Albuquerque that we have multiple contractors on, and one of the contractors is ex Open Door guys that needed work, and they're awesome.
That's interesting. Yeah, they're definitely biting the dust a little. I don't think that the iBuyer business model is going away. I think somebody's going to figure out how to build it better, and it'll be something that all of us have to deal with as real estate investors in this space and going forward, I think.
Yeah, honestly, I look at it, and the typical wholesaler is all about them and not about the seller. And if you could make that price adjustable at a point, you know, avoiding the net listing, but making it so they got a percentage. And if the iBuyer takes over and loses money, then it also comes back, and it would just be a conversation that would need to be put into an algorithm that could be used, you know, state or nationwide.
I think that's great. Yeah.
What do you see going forward as you're sitting there? You know, like I said, none of us have a crystal ball. We can flip a coin. What kind of trends are you seeing in the marketplace that people should be aware of?
I think that the trend of corporate real estate investors, institutional investors that have entered the single family home space, I don't think that that's going away. I think more people are going to continue to pile in it. You did have a good point there about not being able, you know, with the 1% rule, not being able to make these deals pencil. But I just don't think that they're going away. I mean, in the last quarter of 2022, 28% of all the single family homes sold in the United States went to corporate real estate investors like Pretium Partners. So I just don't think that that's going away. In fact, I think that that's going to continue to grow. And I think it's going to be a huge competitive threat to mom and pop real estate investors, because wherever there's money, Wall Street's going to get into it. And for, you know, my message to real estate investors out there that, you know, see this threat, they need to be well funded. You know, don't pigeonhole yourself with one private money lender or one hard money lender out there that you've been working with. Get pre-approved by as many private money lenders as you possibly can. Get them on your phone, in your contacts. They're one text away, because these guys have deep pockets and they can buy blocks of houses, right? So you need to be prepared to go make a cash deal. And I think that mom and pop investors will be able to compete, especially if they stick to their markets that they know really well.
You know, it's interesting, the flip side to that. And you know, Roger and I had a conversation, 2000, just as COVID was starting. And we were speaking at an event, and we were talking about, you know, that a lot of deals didn't make sense. Except for the fact that you can buy a deal if you can find a way to make the payments on it. You know, when you've got inflation as high as it is right now, and I think we had, correct me if I'm wrong, Roger, I think it was like 27% through Utah for almost a year in 2001, something like that, in housing prices. And so, I mean, unbelievable. I show people, if you can get 5% rate of return or appreciation, and you can leverage these things, you can get 25 to 50% return on your money just with inflation. And that's at 5%. If you magnify that at 15, 20% plus, and it just seems like the price of housing continues to go up. We're still not seeing that flood of inventory that we've seen in past, the beginning of past recessions and things like that. So maybe they're right. Maybe my experience of 3 or 4 recessions in my career, and it's got me a little jittery about single family houses, and maybe these guys are right. Maybe they just, like you said, have deep pockets and just throw money at it, and knowing that the stuff is going to continue to go up, and they'll look like heroes on the back end. And we've seen a lot of that here. We all attend some of the REIA clubs here, real estate investor clubs, and you see a lot of people that have ended up with a lot of money that didn't really have that much experience when they started. They just rolled the dice at the right time, so to speak. So who knows? We, like I said, we may. I may be on the wrong side of the track again. I know I was on the wrong side during COVID when I said, "Hey, let's be a little bit cautious about stuff going forward." And the people who didn't listen to me made lots and lots of money. Roger was an example of it, right? He continued to flip several houses a month or a year or whatever, and made quite a bit of money. And I was sitting there going, I'm scared, I'm afraid to get into the market. And that's not completely true, but I was a lot more conservative about what I get into the market about. So anyway, like I said, we'll find out, but it's definitely a really crazy time in the market to try and figure out what's going on. So
I agree. I mean, and if they continue to pile more and more money, institutional investors pile more money, and it's international. I mean, these guys all attend the same, conferences and, conventions, and they learn from each other. And so as it grows, it's going to do exactly what you said. It's just appreciation. And I think that's what they're betting on, because a lot of these guys, like you said, they can't be making any kind of real returns on these purchases. And maybe it's all a big master plan. I don't know. As more people are buying houses, it pushes prices up higher, right? So less people can afford homes to live in, right? And they're forced to rent. And what are these guys doing? They're buying homes to rent. So I think as more people pile in, I think you're right, Earl. It's just going to be that inflation combined with the demand for housing is just going to continue to kind of push it up higher and higher. And I think you're right. If you can hold on to it, and you can cover the difference between what you're getting in rent and your debt, and you hold it for 5-6 years, you probably can't lose.
Well, and then there's the tax component of it. And are you doing accelerated depreciation on any of your cost segregation? Are you doing any of that on any of your investing?
I am.
Are you?
Yep. And how about you guys?
As much as possible.
I was kind of upset. The CARES Act semi-expired this year, so instead of taking 100% of the depreciation up front, we're only taking 80% of the stuff we buy this year. And I personally am carrying about $2 million loss carry forward. I jokingly tell people I will probably not pay taxes again until the day I die. I've got enough loss carry forward that I'll just continue to use that. And it's not just this, but with what we generate, I think we generated another 300,000 or 400,000 this year that I already can't use because I've got carry forwards from several years back. So I need to find a way to make a whole lot more money. Sell some of my properties so that I can use up some of that loss carry forward. So.
Well, I think that's something that a lot of people that are just getting into real estate investing, don't understand a lot about. I mean, you can have a whole seminar, I think, on this topic with different property types.
Very, very cool. Roger?
Yeah, speaking of the different property types, we've kind of focused on single family. What else does Private Money Utah do?
Well, I have been diversifying away from fix and flips. I'm focusing only on fix and flips that are in that affordable price range that we talked about. Something that has a resale of 500 or less, preferably 450 or less, because I really see just a ton of that. Activity, the flurry of activity that we saw, in 2021. So I'm focusing on other property types. I'm interested in conversion right now. I'm funding different conversions from hospitality, hotel, motel into affordable housing. I think that is just, there's an insatiable appetite in the market for affordable housing, like we were saying. And then you've got a lot of, government, municipality subsidies that are going, are supporting those types of projects. There's a huge project that's going on right now in Salt Lake with I don't even know who's behind this, but they're genius. I mean, they got all this funding from the state and the city to convert this huge office complex into affordable housing. So I don't even think they had to use their own money, maybe a little bit, but it was all funded from different government sources. So I'm focusing on conversions. I'm really into that right now. I'm into, I like commercial industrial. I think that there's going to continue to be a need for that because more and more people are shopping, doing e-commerce. Retail's just really biting the dust and seems to be less and less every year relevant, and e-commerce is growing. So those are the two areas I'm really looking into. And then I'm into alternative housing as well. Like I really like mobile home parks, RV parks, mobile home renovations, manufactured and modular housing projects, stuff like that. Because again, it's the affordable housing component that not only is in great demand, no matter what type of market we're in, but also, like I mentioned, the government subsidies are out there. The states, the cities, and the national government, they want to give you money to build affordable housing. So I like that area.
That's awesome.
Go ahead.
No, go ahead, Earl.
I was just saying we ran past a small apartment complex a couple of years back. We ran it past you down in the one in Albuquerque. I think you had some concerns about the Albuquerque market itself, and not necessarily about the projects. Are you doing any multifamily at all?
I am, but it's kind of like you were saying, Earl, when we first started this conversation is, getting the deals to make sense. I mean, I'm finding that sellers just want so much money for these projects. And it's almost like every deal that goes by my desk, I'm eager to do multifamily, but it seems like every deal I'm seeing, the seller wants a future value. Which when I say that, I mean, they want the value add today. So they want a price today that it's going to take my borrower to go in and, fix the place up, get it re-rented at a higher market rent. A lot of them are under rent. And they want that price today that property is going to be worth with that net operating income, so it's tough. It's tough to find any multifamily deals right now to fund that makes sense. The last one that I did was up in Pocatello back in September. And that was it. That was the last one that it's come across my desk that actually made sense. The other thing is the equity. A lot of these borrowers come to me and they don't have any money. So I kind of have to show them, here's different avenues that you can go to get the equity to bring to the table. If I'm going to fund, say, 75% of the purchase price of an apartment complex, that 25% has to come from somewhere. And a lot of these people trying to get into the multifamily game, they don't have that. So a lot of my time is spent saying, well, do this, do that. Here's some different avenues for you to go to find that money.
Yeah, Earl and I'd like to know if we could buy some apartments and have you fund them. And then we'd like to cross collateralize with our motorcycles.
We don't have any money either, but each of us have 5 bikes out in our garage. Roger's got more than I do, so they have an infinite value to both of us. So you should see that as a viable cross collateralization, I think.
Yeah, we want you to value them at the same value that we do because we love them. We'd never sell them, so they're priceless.
Well, I think I would make you get a life insurance policy on our next loan together if you're going to keep riding those bikes. No, I'm just kidding. I think it's great that you guys are into that, and you guys are actually really good at raising the equity, piecing money together between different people and different groups, and putting it all together, and then combining that with private money, bridge loans to complete your acquisitions. You guys are the masters at that, so good job.
It's honestly not about bringing the equity, I think, as much as it is just making sure that it's easy to bring the equity if you have deals that make sense. And so
Right.
we started talking about the 1% rule, and we underwrite using the 1% rule. One of my favorite things, we talked Saturday. Roger was there when we spoke at a seller financing seminar, and one of the things we've used to negotiate for a long time is a 1.25 debt coverage ratio. I go put something under contract, and if the seller's asking more than the property's worth, we can argue all day long about what the cap rate in the market is. Is Salt Lake a 4 cap now? Is it a 5 cap? And try and figure out where these things should be priced at. But the one thing that the seller can never ever argue with is when I take their numbers exactly as they ran it last year, and I put those into my calculator, and then I plug in, and I take that to a mortgage company. They come back and say, we can't fund this because it doesn't meet a 1.25 debt coverage ratio. There's not enough income after you pay the mortgage and all the expenses to have a 25% cushion, and so we can't get funding for those. And so that's my contribution to making the world a little bit more sane in that multifamily sector. Is I put these things under contract, and then we go do the debt coverage ratio and say, if you can't, if this doesn't, if we can't underwrite this, if we can't price this at a place where it's fundable, then we can't do a deal. And there's been a lot of people in the past couple of years that have been willing to overpay for stuff along that line, and we're just not willing to go beyond that line, and I could do, if there's enough upside, and I can get a return, I can average the cash flow as well as the upside together and get a 30 or 40% return, so I can give 15 to 20 back to our equity partners. I'm willing to do that. But if they want all of the equity up front, like you said, that they, in 2 years, you're going to raise the rent and this is what it's worth. So you guys can buy it for what it's worth in 2 years, and you can do all the work and spend all the money, and I get all the profit. Those just make no sense. And we're fortunately seeing the market is just starting to transition a little bit. More sellers are saying, hey, let's, he's probably right. 2 years ago, the broker was saying, "Oh, client's crazy. Let's get somebody else to, because we've got somebody else out there that'll put this thing under contract." And today, the brokers are throwing their hands up and going, "Yeah, there's nobody else out there that can close these deals anymore because it's just not as easy to get money." So my hope is that the world continues to change a little bit, but I think in the right space. And that's one of the reasons why we do a lot of stuff in Albuquerque, because it's been easier to meet that. The rents are a little bit higher for the price. Actually, the cost of unit is way, way low. relative to some of the other markets that we invest in, and the rents are still reasonably high. So they ultimately make more sense with that. So
Yeah, so you've had to go outside of Utah then to chase yield, and you guys have been real successful doing that. But it's sort of like you said, here in the state, it's really hard to find deals that make sense. Everybody wants this high price, but from an investment perspective, there's just such a gap.
yeah. The last thing I bought in Utah was 2017, I think. That's the last time I made an apartment deal make sense in Utah. So, but again, we're pretty conservative on our underwriting. I've seen I may be the only one at the RIA clubs that remembers the last time the apartment industry melted down. We've seen a couple of single family housing meltdowns, but I was around when the last national apartment meltdown happened, and I saw that it still has, it's traumatic. It's like watching your parents fight and get a divorce when you're a kid, and it has a lasting scar upon you. Watching the apartment industry melt down and people lose their shirt, it's like I'll never forget it. I wake up, and I'm just joking, but you wake up in the middle of the night screaming, "Oh my gosh, it's coming!"
When was that, Earl?
It started in what caused it was the '86 Tax Reform Act, because people were buying apartments based upon not just the cash flow, but based upon we can sell them for more money than they're actually worth, because people were going to get doctors, lawyers, high income people were getting no cash flow but a significant tax break, and they rolled that back, took the tax break away, and said that's when the passive investing versus active investing rules came into play, so that you can't apply passive losses against your active income. People said, well, if there's no cash flow and it's not going up in value, all I'm getting is a tax advantage that I can't use. Why would I invest in those? And so all these deals were over leveraged and couldn't continue to make their debt service. And so government caused it. And then I came out of college in '91 and worked for an RTC contractor. And that's what I did is help the savings and loans take back those properties. We helped renovate them and get them back on back up and running again. And I watched a lot of people who were ready to retire that had significant assets. I mean, 15, 20,000 units that they couldn't, the projects were even paying their debt service, but the values had come down, and they had to get letters of credit to extend those loans. And the letters of credit said, if we can't get the appraise at 75% loan to value, then we can't extend your letters of credit. So the loans were even being paid, and those things were all going back because just a crisis in lending. And that one was government created. I think, unfortunately, most of the really nasty cycles, whether it's up or down, they seem to be government created too. So we never seem to learn our lesson. We just continue to tinker and cause more havoc that we'd probably be better off if we just left the world alone more often. So,
no doubt.
Roger, anything else?
No, I do have a couple of questions though. We both know that you're into mountain biking. You do a lot of mountain biking, and I think you also mentioned a trail. You want to tell us about what you did on a trail, like a trail you made or designed?
Yeah, I'm the president of the South Summit Trails Foundation, which is in Summit County, but it's in a really rural area in Summit County. As you guys probably know, everyone out there knows, most of the trails in Summit County are concentrated in Park City. But with housing becoming more and more unaffordable, a lot of workers and people have been pushed out into some of these rural areas of Summit County. And so I personally live in South Summit County. So I'm head of this Trails Foundation, and we're building all kinds of trails, transportation trails, recreation trails. We're working on a big trail right now up in the Uintas. It'll be the first purpose-built mountain bike trail in the whole entire United States. It's in a national forest. It'll be 15 miles when it's completed this year. We've already got, 10, 11 miles completed of the 15. So we've got a little less than 4 miles left this year to complete. So super stoked about that. We've got some trail counters on that trail, and it's that old saying, build it and they will come. You just think, wow, this trail's out in the national forest. People have to drive really far to get to it, but our numbers are incredible. Our numbers from last year, when we built the first phase of the trail 2 years ago now, the numbers went up 75% year over year. I mean, we've got 3,500 people on this trail mountain biking in a monthly basis. So that's really exciting. And I do a lot of mountain biking. I moved here specifically for snowboarding. I thought, well, where can I work in the city and live in the mountains? And there's really not a lot of places like Utah in the United States where you can live in the mountains and work in an office building right in downtown and be, 30 minutes away from that, 45 minutes to an airport. So that's what I did. As you know, this has been a record year for snow. So I usually am fighting to get, 30 days in a season. Like I'm going up, doing my 2-3 runs and going, okay, that's a day, but this year it was like 30. Wow. I got 30 that quick. So it's been an incredible year for that, for sure.
And for the listeners who don't know, Summit County is a very unique area for Utah. It is, it's by far the highest income county in the state of Utah, and that's mostly attributable to the ski resorts. You have all the really, really incredibly wealthy people that come in and buy cabins and stuff up in actors and incredibly wealthy people up in Deer Valley, but where you're at is not very far away from that. And I remember as a kid going camping up there in Camas, and there was nothing more than the burger and fry shop on the corner, and that was it. But it's become very, very upscale up there in Camas. I think I ran into you a year or so ago. My son and I were going fishing up there, and we ran into each other at the grocery store up there, and it has become very cosmopolitan up there in Summit County. Absolutely gorgeous place. And we were up fishing right very, very close to the trail that you were talking about. Just one of the most beautiful mountainous areas in the world. And honestly, one of my favorite motorcycle rides is to go up over the Mirror Lake Highway. Yep. Absolutely gorgeous. So congratulations for figuring out a way that you can go up and you live your passion up in it's not you want to say up in the mountains. It kind of is, but it's not a lot more mountainous than Salt Lake City, but it's just a gorgeous area up there. So
yeah, I think a lot of people, they think, they have these wants and these desires. I talk about this sometimes when I speak at the Real Estate Investor Club meetings about how people have these dreams and these visions of what they want in life. And usually it's more time and more freedom. Like you guys love to go and take your bikes and go ride your bikes for miles and miles and go see some beautiful landscapes and scenery and nature. And I think sometimes when people are pushing so hard for this goal, of building for retirement or building a business or building a real estate empire, they lose sight of that. And that's what we're all after, right? I mean, and that's what it's about, finding that balance of what do you ultimately want to be doing, and try to do more of your time today. I know you, Earl, had an unfortunate almost skirt with death about a year and a half ago. And that probably opened up your eyes a lot too, man, I want to do more of this stuff, right?
I'm incredibly lucky to be here. I am doing very, very well. I was going to ask you a little bit about you've been down to Moab and ridden the Slick Rock on your bike, haven't you?
Oh yeah.
Yeah, we were down. Just I took my grandkids and kids down, stayed in an Airbnb down there 3 weeks ago or so, and I've got a little a TW. It's a little 200 motorcycle. Most people don't realize that they let motorcycles on that Slick Rock Trail, and that was just absolutely incredible. It's so much fun to go out and ride that. I'm probably too old to go pedal that far out there, but I can twist my my right hand a little bit and get up and down the hills. So Roger and I keep joking that we're going to come up and bring our dirt bikes up and test out that mountain bike trail up that you created up in Summit. And I know you don't appreciate that too much, but anyway.
Yeah, speaking of that, I actually have a Specialized that's a pedal assist. What's your opinion on those as far as putting them on regular dirt trails?
I think it's great. I think it gets people out, and because how much longer do I have before I'm going to not be able to get up there in that beautiful nature? I'm going to be too old to be able to do it, and my body's going to hate me. So I think electric bikes are the future, and I think it's a way to get people outside. I'm all about motorized and non-motorized because, how are you going to appreciate nature if you can't get up there? Like, you were saying, Earl, giving it a little with your right hand and getting yourself up in these areas, that's how conservation happens. How many of these politicians out there that are making decisions about, our environment and the future of these open spaces, and how many of them are actually getting out there and enjoying it? So yeah, I'm all about it. Get as many people as you can out in these areas so that we can keep conservation in the forefront of everybody's mind.
The retirement, we talk a lot about business and that type of thing, but one of the things I love about this podcast is that we get a different perspective also, which is kind of what you've been talking about, which is life is too short to spend your life 70 hours a day, and I've had that, right? When I was in the corporate world, I would say goodbye to my family at 2:00 Monday morning, head for an airplane, and come back Friday, sometimes Saturday afternoon before I'd get back home and go to church on Sunday for a few minutes and get back up and pack my suitcase for my next weekly trip. And that's not a life. I mean, that's it doesn't matter how much money you're making, it's not a life. But if you can find a way, and that's what I love about what we're doing right now, is that none of us are committed to doing this 100% of our time. We spend quite a bit of our time building the business, but we all realize, and we designed it this way, that all of us have to have some outside interests. And for me, more often than not, especially as it's starting to get warming up, my outside interest is I'm going outside. I'm not going out to work on another project or whatever. I'm going out and enjoying the sun and getting a little forced air on my motorcycle or whatever, feed my lungs a little bit. So anyway,
wind therapy.
Wind therapy. There we go. High speed wind therapy. When I was in the hospital and they had me on 10 liters of oxygen, I used to joke with the nurses, if you guys had just let me out and get on my bike, I know that I can. You just take the helmet off. You head 80 miles an hour down the freeway. If I just open my mouth, it'll just fill me up with oxygen, and I can solve this. They didn't think that was very funny at the time, but I was pretty serious. I was adamant. I would have done anything to get out of there. And once you've had pneumonia, it takes, I walk 2 or 3, probably average about 4 to 5 miles a night that I walk. And I was telling Roger and Ben just yesterday, I think, if I don't get my walk in almost every day, if I go a couple of days and I don't walk, my lungs start to feel heavy again. And so it's that getting out and exercising is not just something I do for enjoyment anymore, but it almost becomes a necessity that I feel like I have to do that, to stay on top of my game. So all to get us a few more years here where we can go and enjoy what we really love to do and spend time with our families. So.
Yeah, whatever it is you want. I always tell people, decide what it is that you want, and really soul search, because one of the books that really affected me was A New Earth by Eckhart Tolle. And I definitely think that that's a must read for anybody that's trying to figure out what their purpose in life is, because boy, does that book ground you, man. It really brings up a lot of alternative thoughts about ego and why we do what we do, and a lot of it is perpetuated by our egos. We think that we associate success with having a big house or, a nice car or, all these things. And ultimately it boils down to ego. When we really soul search and ask ourselves why we want these things. The other thing is ultimately, if you ask everybody, most people are going to tell you that they want to build wealth because they want to have more time and more freedom. And so I think that it's important for you to decide what it is that you really, really want and what you're after. And if it is freedom to do certain things, make time for that now while you're building your empire, I guess, if you will.
Very good. I agree 100% with that. That's incredibly prudent advice. Roger, you want to go to the final four, or you got another question or two?
Let's do it. It's now time for the final four. Corey, what is your favorite business book?
Hands down, I mean, this was a hard one for me to decide because I'm an avid reader, and there's a lot of books that have really shaped me and molded me and given me great insight. But there's one in particular for real estate investors that I think is a must read. And if you haven't read this book, you better get on it. Whether it's audio or you actually buy the real thick version. You can see all my little flags here. This book's called The Secret Life of Real Estate and Banking by Philip Anderson. I always forget his first name. This is a hard one to find. But I recommend that any real estate investor that wants to figure out the market and how it works this is a good book, because it goes back to the very beginning of U.S. history, when there was that major land grab, when everybody was moving west and getting big tracts of land from the government and getting title to the land. And that's how it all began, man. And talks about all the different crashes that we've seen throughout U.S. history. So if you are going to get any book, if you're going to read any book this year, this is it. The one thing, though, that I've noticed, and I talked about this earlier in the podcast, which is, again, getting back to the institutional real estate investors. Never before in U.S. history, in the real estate market and cycles, banking cycles, have we ever seen this huge grab by these institutional investors. So that dynamic, even though we've seen these cycles repeat over and over again with these credit crunches, right, that created these crashes it talks about in the book, never had the institutional aspect. So I think it's going to be real interesting to get to the next chapter that we're entering into now with it.
That's a lot of enthusiasm for a book. I'm guessing you like it.
I'm on my second read. I'm on the second, especially lately. I'm like going back to all my little flags here and just being like, gosh, it's a fun book to read, guys, because of all of the scams. Just reading about these scams since the beginning of U.S. history, it's hilarious.
I'm looking at your book there, and I'm going, holy smoke, that looks like one of the textbooks that I read in college. And then I'm thinking, well, you have an MBA, so you probably spent a lot of time going through a lot of those same kind of massive textbooks. And after a while, you do kind of get a love for them, even though it's still, the thought of going back to school still makes me shudder a little bit sometimes.
No kidding. I think it's on audio. If it's on audio, get it, because that's the thing I love about audiobooks is you can be like, wait, I got to listen to that again. Go back to that.
Yep. And some books, it's obvious with all your bookmarks on that one that we'll want to get both. And sometimes it's on Audible and you're like driving, and 5 minutes later you're like, I was thinking about that car that was going to cut me off. I was thinking about later. Rewind the Audible and you miss it. And sometimes it's nice to actually read it and underline it and think on a thought for more than the next 3 seconds until you have to do something driving.
I do a lot of my stuff on audio now, and I told you I have to walk an hour and a half, and so what I will do is I'll put my headset on, I grab the leash and take the dog out for a walk, and we'll put an audiobook on. And I have to tell you, I've got two little kitties. We adopted the kitties about the same time we got the dog last year, and in the beginning they were kind of fighting with each other. But those two cats are so incredibly cute. I've never seen cats. I grab the dog and the leash, and they line up at the door, and they want to go for a walk with us. And they just walk, and they will follow us for 3, 4, 5 miles, or it doesn't matter. But those two cats are right behind. I have to turn around every once in a while. Hey, come on, kitties. But it is so cute to see those cats out enjoying a walk. And I'm listening to some favorite book on podcast, or podcast, or some audio book. So I absolutely love it. It brings me a lot of joy to go out and listen to books, and to see my cats following behind me. It's just
that is hilarious.
Yeah.
Great segue, Earl. What brings you joy, Corey?
I find a lot of joy in building the trails for the people. Part of the vision, when I set my intentions, one of those intentions is to build a system of interconnected trails. And, when you're setting your intentions, you're supposed to actually use your creative mind to visualize that thing. And what I visualize is, a woman or a man out there that's just be at the edge, right on the edge where we've all been. Sometimes we just didn't know what we were going to do. And I just picture that person on my trail, getting a clear head and going back to the world, renewed and ready to take anything on that comes their way. So that gives me a lot of joy, is knowing that hopefully, in Europe, these trails have been around for thousands of years. So hopefully these trails will bring joy to people for 1,000 years. That's what I'm hoping. I don't need my name on a trail. I just the idea that trail is going to be there. That's a legacy enough for me. So that gives me a lot of joy.
Very cool. Let's see. Describe what your future retirement looks like.
Wow, that's a tough one. I don't ever see myself fully retiring. I mean, it's kind of like what we were talking about before, like the balance, doing the things now that you see yourself doing in retirement, doing the things now that you're working so hard for, right? That you really truly want in your heart. And so for me, I really don't ever see myself fully retiring. I think if there is a retirement where I'm not ever getting money for investors, because I really love doing that, I think it would be in making, films, documentaries and stuff like that, because I really like documenting things. I really enjoy Vice. I don't know if any of you have watched any of that. It's on YouTube. It's a channel on YouTube, but they cover, it's kind of a documentary style, like 60 minutes, right? I could see myself doing that, honestly, going into a country or a culture within the US and documenting that and doing a documentary. So that, I think for retirement, I see myself maybe going into the arts.
Very cool. And I think you've kind of alluded to it, but what is the best way that you think is to give back?
It's kind of like finding that thing that you're passionate about and going and doing that, because I think that's the way that we give service to the world, whatever that is for you. If you have a passion for making sure kids have an education, go and get involved in that and give some of your time doing that. Like me with the trails, seeing that there's no trails in South Summit County and no way for kids to ride their bikes to school. But whatever it is for you, do it, and decide how many hours you want to give to it a week, because that's how our light, I think, shines in the world, right? It's not just about making money and, self-interest and narcissism, right? And ego. It's finding that thing that you care most about and contributing to that, even if it's just money. Like if you can't, like, let's say you want to give to the Humane Society because you want to help animals that are in need. You don't necessarily need to go volunteer. Maybe you just pull out your wallet. But yeah, I think that it's important to find out what you truly, truly care about, what stirs your heart, what brings tears to your eyes when you hear a story about something that just gets you, and then going and doing that and giving, either service or of your treasure. You know how they say your time, your talent, or your treasure. If you don't have the time and you can't give your talents in the form of volunteer, give your treasure, but find that thing.
You know, we interview a lot of people on this podcast, and we all ask them all the same 4 questions, and it's amazing when we talk about giving back, and I think absolutely give of your money if you've got some and you can afford to do it. But every single person that we've interviewed has told us that if you can actually give of your time, that it becomes even a higher level of helping other people, but the benefit that you get from that is far, far superior. It's easy to write a check and say, oh, I've contributed to the world. If you can get out and spend some time and actually see the people's faces that you help, that brings a lot of joy. The times that I do it, it just brings me a ton of joy and happiness, and I think it's been a consensus of almost everybody that we've interviewed on this podcast, Roger. They've all said about the same thing, haven't they?
Yeah, that's definitely one of the biggest things. When you value yourself at a rate that earns you this much money, you definitely get a lot more when you give back, and you can see the sparkle in the child's eye when you build them a house in Tijuana, or save somebody, or feed somebody, or whatever it is. It's definitely a huge thread. Nobody's actually said, I wrote a check the other day to the food bank for, some extravagant amount, and had that be their brag. That's never been the case at all.
Well, you guys, both of you guys and your colleagues, you guys are always giving back, because you have a lot of people that are new that approach you with questions, and they want to pick your brain, and they want to get your insights. And all of you guys are so good about that, about sharing your stories and your expertise and giving back that way. So I respect you guys a lot for the time that you donate to the newbies that come into this business. And, I know you guys get those calls and you're like, oh gosh, I don't have time for this today. But you guys give, and you guys have impacted a lot of people's lives that way. So thank you for that work that you guys do and you continue to do.
Man, this has been so much fun. Roger, you want to, I'll just take a second and just tell, Corey, we actually love working with you. You've been, the business deals that we've done, you have been completely above board, straightforward with all the things that and my life has been infinitely blessed by having you do business deals with, and to have you as a friend. We see each other a couple of different RIA clubs that I know that we attend, and I look forward to seeing you there. I jokingly, when I go to the RIA clubs now and they ask me excuse me, what am I hoping to get, for me the answer is always, I'm just here to see my friends, and you are one of those good friends that I love to go and just hang out with. It's like a country club for me now. I can go hang out with really good people and socialize with them. So we really, really appreciate your time to come and share with our listeners. And I have thoroughly enjoyed the time that we spent. We really appreciate your time.
I feel the same. It's like my only social networking event that's not online, that I go and I get out and see my friends and hear about their wins, hear about their losses, share war stories. And it's awesome, man. It's totally awesome. So thanks for having me.
Is the best way to find you online, Corey?
Through my website. Well, most people nowadays are on Instagram and TikTok, but you can find me on Instagram at Corey Dutton Lender, or private_money_Utah. And then my website is privatemoneyutah.com. Super easy. And yeah, if you want to reach out to me directly, best way to get in touch with me usually is send me a text and set up a call, whatever you want to talk about, 435-655 1190.
Perfect. Want to thank you for joining us on the Retire Wealthy and Happy podcast, Corey. Have a great one. We'll see y'all next time.
See you next time, guys. Thanks so much.
Thank you again. Appreciate it.
Hope you got value from this episode. And if you have a minute, then take the time to leave an honest written review for the podcast, because we take those reviews seriously and it'll help us serve you better on the next episodes. And most importantly, be sure to start taking action so you can control your financial future today.